Good afternoon, everyone, and welcome to WCEG Network, the new WCEG talkradio.com. You are listening to Veterans Today. I am Herman Anderson. My co-host is Anthony Aiken. And as I go through the preliminaries and tell you how you can listen to us and our statements, then we will proceed with the program. Again, this is Veterans Today. You're listening to the new WCEG Network, and we are the worldwide community empowerment group. You can like us on Facebook, follow us on Twitter. Uh, you can also follow us on Instagram and YouTube. Here are several ways that you can listen to us or view us today. Uh, WCEG Talk Radio, WCEG Network, WCEGTalkRadio.com, lyvradio.com/WCEG. And as I said before, you can uh, follow us on Facebook. Uh, Also, we are on Twitter and we are on YouTube. Subscription is free on YouTube. We are live on YouTube also. And as I said, this is WCEG Networks, and the topics that are in opinion that are discussed today are those of the guests, then not the views of the network. Those are all the disclaimers and introduction, and we'll get started now uh, with my co-host, Anthony Aiken. Then we'll move to our guest today. Good morning, Anthony.
Hey, man, how you doing? It's so good to be with you again. Thank you for the disclaimer for all of our listeners around the world. And we're excited today, very excited today, to have an individual that I have worked with for the last several years and doing my taxes. And this individual is very competent, as a veteran. And as I said before, I've used him for my personal use. And Herman, he's just going to be exciting today. And we're going to be introducing to you right now our guest, Mr. Marcus Dorsey, CPA, tax consultant extraordinaire. Good morning, Marcus. How are you?
Good morning. I'm wonderful. How are you guys doing?
Doing great.
We're doing good. We're seeing you. So, you know, it's good for you to be with us. So why don't you just let our guests know who you are, and then we can get into why you're here.
All right. Very good. I'm Marcus Dorsey of Dorsey CPA. We are a CPA tax firm that has a primary focus on income tax planning. We also prepare tax returns and do as well as taxpayer representation. But as I mentioned earlier, our primary focus is on income tax planning. I feel like when you do tax planning, that is the best thing for you, because that gives you the ability to have a better understanding of your income taxes, as well as have a better idea of where your bill or where your liability is going to land, as opposed to just allowing the taxes to happen to you.
That's good. Say, for instance, like Herman and I, we're veterans. Does your firm provide a lot of tax advice, guidance, support to veterans?
That's a very good question. But what we do, the short answer would be yes, but we provide tax advice to anyone. Veterans, actually, we do have some veterans that patronize us, and we greatly appreciate that. However, we don't necessarily discriminate, from veterans or non-veterans. What we do, we will help anyone that wants to be helped, from a perspective of, again, they want to do better with their income taxes, as opposed to because we have conversations with our clients more so around the possibilities and opportunities that are available to them via the income tax code, as opposed to just having a conversation about income tax returns and income tax refunds.
I totally agree with you. And based on the last 2 years with the with the COVID-19 disruption in the economy and disruption in our income. Let's say 2019 taxes and 2020 taxes. It's my understanding that the IRS made some adjustment to the tax code. I'm one of those persons that I'm a year late, so in preparation, is there tidbits of information that apply, say, to 2019 and to 2020 that are new based on the situation we're in now?
There are a few things that happen primarily with 2020 last year due to the COVID situation. One of the changes that happened is the IRS allowed. So what happened? A lot of people were laid off, and so they had to find different ways to support themselves. And one of the things that that Congress went ahead and did was, if people needed to borrow money or make a withdrawal from a qualified plan or their retirement plan, 401k or 403b or IRAs, so early distribution. What Congress did was they allowed people to make that distribution, and if it's an early distribution, they were able to do that without being penalized. So the 10% penalty that would have occurred for last year, that penalty has been waived. In addition to that, they also allowed for that same individual to be able to spread the additional taxes due to that qualified plan withdrawal. They allowed them to spread the taxes over a 3-year period, and they also have the ability to pay to make that payment back to the qualified plan over the same 3-year period. So that is something that Congress did to help ease the burden, for the loss of revenue and helping people to make ends meet during this time. Something else that was done recently is a lot of people were utilizing unemployment compensation. They had unemployment benefits. So the IRS also made note of that, and they allowed the first $10,000 or so of unemployment compensation to be tax exempt. So if a person had unemployment compensation of, say, $12,000 last year, the first $10,000 of that compensation is exempt from income taxes on a federal basis.
I mean, what you just put out was a wealth of information, especially with the federal government waiving the return and also leading it out over a 3-year period. But I was interesting to hear you state that they had the opportunity to repay that fund back over the same period of time. But
Right.
with the pandemic and so many job changes and lack of, companies use this as a method of thinning out their line, not rehiring people and not refilling positions. do you see individuals having a difficulty trying to regain that additional income to put back into a plan that they were forced to do based on the COVID pandemic scenario?
Well, we are about almost 6 months into this, year two of this situation. And there are a lot of people that are trying to find employment. Some people have been able to do that, and there are other people who are still still looking for employment, or looking to find employment to be completely gainfully employed. So there are some people that were laid off from their previous position, and they have been able to find some work, but they are considered to be underemployed at this point, meaning that let's say they had a job making, say, $50,000, and so now they've been able to find some work, so they might find a job where they're making $25,000. So that would be considered to be underemployed, when their skill set or their skill level would warrant them being able to make more money. So and then there's some people who have were laid off in in various positions or situations, and they were able to find work. They will be able to find, another job and even make even more money, because there's a demand out there for people. The demand is starting to increase for people as the economy is starting to open back up in some states. So there's room for people to start working again. It's just a matter of whether or not they are willing to take, some of those risks as far as, their positions are concerned. So it's just different cases across the board. You might find one pocket of or one industry where people are unable to find work, and then there are other industries where people work is plentiful. So
let me ask you a question. It's kind of an income tax CPA planning information, but it's not necessarily based on that. It's with the new administration and the new economic plan. Have you had time to take a look at any proposed changes in the tax laws that you think may benefit, say, people that are in middle income bracket, or may benefit people that would like to start a business based on the new environment that being presented to us now by the people, the president?
So I have been looking at some of the proposed plans that the new administration has, and I haven't really looked into the new business models at this point. Some of the things that I have looked at were some of the changes that are proposed to some of the things that are basically the staple of wealth creation. For instance, there's a tax guideline, or a tax strategy, if you will, for passing on wealth from one generation to the next. And one thing that the new administration is proposing doing is they want to basically eliminate what we call a step up in basis for when people pass away. They want to eliminate that based on certain parameters, So what that means is if, so let's say you have a person, let's see, you have a family member that purchased, let's say, some stock for $50 a share, and they kept it, for 40 or 50 years. And now that same stock is worth, you know, $200 a share. So that would be, a capital gain of $150. And so what the administration is proposing is, so right now, the way the current law is, if that family member passes away and that stock is worth $200, and you are now the beneficiary of that stock, if you decided to sell it as soon as you got your hands on it, you would not have to pay capital gains at all on that $200, because you immediately take a step up in basis. So your basis is now the fair market value of that stock the day that you take possession of it. So you would not have any gain if you decided to sell it the next day. What the administration is proposing is that there is no step up in basis. So that same stock, when you passed away, your basis, you take the basis of that stock to be $50, the same as it was when your family member originally purchased it.
Yeah.
And so that leaves, now if you decide to sell that stock, that's a capital gains of, you have to pay on $150.
Yeah, totally.
And that's really,
totally understand that process. Yeah.
and that's really significant, because that is capital gains on stocks. So, and if you think about it, that, $50, $150 in capital gain, $150, the capital gains on that's, $150 is not a lot, but let's say that stock portfolio, instead of being $50, was 500,000. And you had, 3 times that. So now you have $1.5 million in capital gains that you now have to pay tax on, as opposed to, the way things are right now, you wouldn't have to pay any tax on that, because you have a step up in basis. And if we add a couple of zeros, so let's say that instead of $50, let's say the asset that we're talking about, the person purchased this asset, instead of $50, let's add a few zeros and say $50,000 is the original basis. And now that same asset is now worth $200,000. Well, now that's $150,000 that we're talking about that you'll have to pay capital gains on.
Yeah, big difference.
And yeah, so the numbers start to add up. And for, and you mentioned middle income people, that could be, that additional, that's about a $20,000 or $30,000 tax hit that you're talking about for a person that's in a middle income bracket, which would be, which is, significant.
Have you run into any situations where individuals were unaware of the taxation issues in regards to a gain like that?
Actually, I probably get that call at least twice a year, where something has happened. And shameless plug coming here, but this is where having a CPA or a tax professional in your corner or on your team is very, very, very important, because there will come a time that, usually there will be a time, at least in your family or someone close to you, where something of that nature will happen, and people are unaware that these type of things, these type of consequences are out there. So when people make financial decisions, oftentimes these financial decisions have a tax implication or have tax consequences. And people really don't understand that and don't realize that until after it has happened, and then they go to have their income taxes prepared, or and then that's when they find out, oh, this was a taxable event, or I created a taxable event for myself without realizing it. But at that point, the the year has ended, and so the transactions have closed. That particular year has closed, so that now that person is pretty much stuck with that with that taxable event and those tax consequences. Case in point, like I have an example, I had a client that, and I'll try to be brief here, but the client, the parent had a home and they wanted to leave the home to the 3 siblings. And, it literally goes right back to the situation that we were just talking about. The parent, for whatever reason, decided to transfer the name, transfer the home to the client, to the taxpayer. Excuse me. The parent decided to transfer the title to the taxpayer prior to death, and then the parent passed away, and then the taxpayer, they held onto the property for a while, and then they sold the property. And after they sold the property, they called to see, what were the tax implications, how much were they going to have to pay, et cetera, et cetera. So had the parent or the taxpayer had they consulted someone prior to, or when this was happening, before they made the decision to do this, then they could have been informed that there was a better way to accomplish what they were trying to accomplish without creating a taxable event for that particular, for the heirs of that property. So what ended up happening is they sold the property, and now because they sold the property and everything that happened prior to, they now have a taxable event, and they're going to have to pay capital gains on the difference between the amount that the parent purchased that property for and the amount that they actually sold the property for. And it could have been avoided had they consulted someone before they made that decision.
So it's really good advice, and I'm glad I'm on your team. But it's good advice for the taxpayer to have availability of a CPA when they run into situations like capital gains or the sale of a home or anything that's going to affect them from as you call it, a taxable event. Correct,
absolutely. And furthermore, and I just think that if you have someone on your team that you can go to and talk to discuss different things with, it just makes a huge difference in, basically being able to create wealth and reduce your income taxes. And it's not just for people. A common misnomer is that, a lot of times when I talk to people, I hear the statement of, well, you're a CPA and that's, you're a tax advisor, but, that's just for, wealthy people or rich people. And I don't have that kind of money yet. But a lot of times there are things that you do that have tax consequences and you don't realize it until after you've done them. And every little bit, everything matters, everything counts. And so if you had a tax advisor that you could talk to on a regular basis, if it's once a year or, 3 or 4 times a year, then that makes a big difference over a period of time. Yeah. If you can consider that, a person making, $50,000 a year over the course of their career, they're going to pay probably about $350,000 in federal income taxes, and that's at least, and that's a minimum, and that's assuming that they never get a raise. If they make $50,000 a year from the age of 20 until the age of 65, and assuming they never get a raise or anything like that, never have any bonuses, never work any additional overtime, everything is just $50,000 all the way through, that person is going to pay on an average of about $350,000 over the course of their lifetime. Now, if you have a person that makes $100,000 a year, same time span, that person is going to pay like $1.2 million in taxes, federal taxes, over the course of their lifetime. So you would want to, if you had a person on your side and on your team that you could help, you can talk to, that can help eliminate, say, 10% of the taxes that you would pay over that same period of time, that would be, for the first person, that would be, $35,000. And for the other person, that's over $100,000 that you've been able to eliminate in federal income taxes, because you had someone over your team that can help you do that.
Well,
I'm a numbers person. So
Okay.
let's say that I eliminated 1.2 million.
Oh,
Yeah.
I didn't say eliminate the whole thing.
No, I mean, I eliminate paying taxes on 1.2 million, and that was
Okay.
10%. So, and if I do have an accountant on my team, and I'll call it, it's late, I call her probably 2 or 3 times a year, if not
Okay.
more than that. So
All right.
what percent of that, how much it gonna cost me if I want to save $10,000, how much is the accountant gonna cost me?
If you wanted to save
If I
$10,000,
want to not pay taxes, have the accountant point out to me how I can legally not pay the taxes and keep my money, but I will have to have an accountant on my team to do that, because I'm not sophisticated enough to figure it all out. So
okay.
how much it gonna cost me? So what would the retainer be per year?
Well, that's going to depend on that's going to depend on a multitude of things. And so, first of all, if you have a tax advisor, that's going to be independent of each person. Each person sets their own fees. But then the second thing is, it's going to be dependent on what we're doing to save that money. And it's a number of different ways and things that can be done. To do a tax plan, you can figure, tax plans are going to range maybe about 30% of what the savings are. So if you are able to save, so if you had a situation where you're able to save, say, $30,000 in a single year, it's going to say, let's say that tax plan might cost you $10,000 to be able to save the 30. Would you consider that to be a good deal?
Yeah.
Okay.
Yes.
Okay. Very good.
Yes,
But
it is.
it's just gonna depend on the
Well,
situation. So, mhm.
Well, that's really my point is, some of us don't want to pay for the information.
Correct.
And
Right.
and I have a situation where you have a combination. You have seven kids and you got a state, and it's all messed up because you didn't get an attorney involved, you didn't get an accountant involved. So and if you had been paying someone all along, 40 years later, you wouldn't have these issues.
Correct. Correct. Yeah, and that's the thing. So if you think about it, when you have a person, you have a situation where you have, um, so I'm of the opinion, and mind you, I'm a little bit biased, but I'm of the opinion that each family should have, there are a few people that everyone should have. At bare minimum, it should be, a family should have, they should have a CPA or a tax advisor. They should have an attorney. They should have a physician, and they should have an investment advisor and an insurance agent. Um, and they should have, oh, I'm sorry, and a banker. So they should have, and not just have one, but they should have relationships with these people. Um, I, in a former life, I worked as an investment advisor, and I worked for a couple of stockbrokers. And I saw some things in that when I was working there that you just don't see. You just don't see on my side of the tracks. And I realized some things then, and I made a decision at that point that A, my life was going to look like that. And B, I needed to talk to as many people as I can about helping them understand the things that happen on that side of the tracks. And one of the things that I saw was there was a guy that walked in. He was 22 years old. At the time, I'm sorry, he was 24 years old. I was 26. So this guy was 24 years old. He walked in a suit, and there were two brokers in the office. The one broker, so he walked in to talk to the one broker. The other broker saw him when he walked in, walked over, shook his hand, they hugged and sat down. They talked for a minute. Then the second broker left, and then the first broker sat down with the guy, and they talked for about 5 or 10 minutes. And then when they opened the door, the guy says, "Okay, here's a check. I'm gonna give you this check, and I'm about to go on vacation, et cetera, et cetera. And I'll be back in 2 weeks and to see and give you the rest of the money when I get the money from my other trust fund." So and the gentleman walked out. So what I took from that situation was it wasn't about the money. It was more so about the relationship. And this gentleman was 24 years old, and he walked in, and when he walked in, he knew both of those brokers. So what that meant to me was, what I saw in that scenario was, that wasn't his first time being in that office. He knew both of those brokers well enough to have a conversation and for them to be able to ask him questions. So that means that his parents had brought him in, and they had talked about things long before this day ever happened. So those are things. So a couple things I took away from that is, one, we need to solicit financial advisors, and two, have those conversations with our children so that they see mommy and daddy, or mommy or daddy, having conversations about their finances with professional people that really know what they're doing, as opposed to just figuring it out on their own. And so, and it's because it's okay to ask for help, because a person that does that picks stocks and bonds and mutual funds and things of that nature, they're going to be much better at doing that on a daily basis, because they do that all day, every day, as opposed to a person that is an electrician or some other profession, and they do that 8 or 10 hours a day, and then they pick up an article, they read an article here or there, and they're trying to make financial decisions. I just think, let people, I'm a firm believer in letting people do what they do and get the best person to do that job. So, and that's why, I focus, I spent 20 years as an accountant, where I was preparing tax returns and doing accounting and everything else. But I decided about 5 years ago that I wanted to focus solely on tax. And that's literally all that I do now. And, it's the equivalent of a brain surgeon. If you have a tumor on the brain, do you go to a general practitioner or do you go to someone that's a brain surgeon?
You know what you're doing. I want you to know, and I'm sure Herman agree with me, and all of the listeners. You're giving us knowledge, and that's why we wanted you to be on our show, because the information that you're imparting, not only to veterans but others, as you said earlier, is extremely important. You talk about taxation issues, the importance of having a CPA, the importance of having a good team that goes from a banker all the way down. Totally agree with you. I've done that for a number of years.
Right.
Because I believe it's a system. Everything
Exactly.
is a system. Now, one thing, you and I speak a lot during the year. So
Right.
what would you say to a person, the best time to start gathering their information to make sure that over a period of time that they have the information that you need to have them to get their taxes done?
That is an excellent question and probably the bane of at least half of my existence. Um, because you and I, we have conversations, like you mentioned throughout the year, and you ask me questions, I answer them, and I ask you questions about different things. So you are, very aware. So and I'm gonna use you as an example. So when January comes around, you are probably the first or the second person that calls me and says, "Hey, I have all of my stuff together. When can I send it?" Because that's due to these conversations that we have throughout the year. So I would suggest, first of all, you definitely need to have a relationship with the person that's preparing your returns, but more importantly, you should keep track of everything throughout the year. I know we tend to wait till December to January or February to start gathering the W-2s and the interest statements and the mortgage interest statements, and then we have to wait on the church donations form and things of that nature. But and that's fine. But in order to grow yourself and to help grow your family's your family coffers, we need to be a little bit more proactive. So keep your own records. So you shouldn't have to wait on the church letter to come through. Keep your own records of how much you are you're contributing to your various organizations, so you don't have to wait on those things. Another thing is you can do is understand that when you're keeping these records, keep track of those documents, of the amounts that you're paying. A lot of times I have people that have they have businesses, and the one thing that I'll ask is, do you have a mileage log? And the answer is usually no. Okay, well, how do you know? But they want the most in deductions. But in order to have the most, that means you're going to have to do some additional work. And that's work on the taxpayer's part, not necessarily on my part. So my job is to understand the laws as they are written and explain them to you. But then there's some work that has to be done on your part where you actually do the work. So that means keeping a log, of your mileage log, so that we can understand how many miles you actually drove, between from business to the office and things of that nature. There are a ton of deductions and things that are available to people. And they don't have to necessarily be mega business owners, or they don't have to be ultra rich and ultra wealthy. But there are rules to the game. And my job as a practitioner is to understand those rules, find as many rules as I can, and convey those rules to my clients. And at that point, it is your job as the client and the taxpayer to listen and follow and understand the rules, and then to understand the rules of the game, and then follow the rules of the game. So when a taxpayer comes to me and says, "Oh, okay, I drove about this many miles," that really doesn't fly, because one of the things that they ask is on the form is, are these, is this, are these miles, is there a mileage log, and was it written down? So so those are the things that so it's a two-sided coin here. It's a double-edged sword, where I can provide you with the information, but you, that as the taxpayer or the client, you're still going to have to do some of that work. Yeah. And oftentimes I get asked the question about, well, I want to be on the plan where you make millions and billions of dollars and you only pay $750 or less in income taxes. and that's great. But the funny thing about this, so everybody wants to be on that plan, but they don't hear everything else that same gentleman says. And the thing that he says that always gets lost in translation is, I pay tax advisors to tell me what to do.
Correct.
And all too often when I'm having conversations with people, I will hear that first question, but then when we start talking about, fees, then it's like, oh, well, that's too much. Okay, so you want to have all of the benefit with none of the risk, and I can't think of anywhere that actually happens.
You got to pay to play.
Exactly.
And what you said earlier about rules of engagement. Herman, you were going to say something?
Yes. I want some of our listeners want to know, what are this year's deadline based on the COVID-19 and the viruses. So the deadline was extended. Is that correct? Correct.
So yes, so the federal deadline was extended from April 15th to this year is May 17th. And in the state of Georgia is also May 17th. There are some states that did not necessarily extend their deadline, but the federal deadlines have been extended. So you would have to check with your local tax person to find out if all the states have been extended. What's the deadline for your particular state?
Sure.
Okay.
Well, that's important to know, because as I said before, you got to pay to play and get the good knowledge, that kind of thing. But
that's also is really, this is the focus of our program, empower the community and provide information. And we, in Anthony and myself, and we've been doing it for veterans, and we specialize in helping veterans deal with disabilities and benefits. And that requires special people and training too. And it requires you to, there are some organization that does it without you paying them directly, but there are people out there that are request a fee to do this for you. And so we run into some of the same issues you're talking about.
Yeah.
Right. Exactly.
Mhm.
And it's really hard because like I literally will have a person in my office and they will be asking, like we'll have a conversation. So we'll do the consultation. And while the person is talking, my brain is turning and I'm thinking, oh, I can do this for them, I can do that, and blah, blah, blah. And so I'm really just thinking of like a whole bunch of different scenarios and things that I could do for them. And then when it comes to the time to talk about, well, what are your fees for services? And I tell them, and they're like, wait, whoa, like, um, like my last guy only charged me X, Y, and Z, but all he was doing was preparing an income tax return.
Yeah.
And the thing that we're talking about here is setting you up for not having to pay as much in income taxes and putting things together so and that it doesn't cost you not, and it's not just saving you money this year, right? Um, Case in point, I had a gentleman that he came to me, we did a consultation. I looked at his information, and so he owned a business, and I looked at it, and I was the scenario I was able to put together. I was able to save him $50,000. And when I gave him the price for my fees, he looked at me and he shook his head and he was like, whoa, that's a lot. I was like, okay, that's a lot, but you have to understand and so that consequently that relationship didn't necessarily materialize. But it's very sad because on his point, on his part, he was not focusing on everything that was happening. So I was saving him $50,000, but it wasn't just $50,000 that year. That was going to be $50,000 per year for the rest of, well, I would say until the tax laws or codes changed again. So it could be 2 years, it could be 5 years, it could be 50 years. So I was going to be able to save them $50,000 for a number of period of time. So basically, I was giving him an annuity for you pay me this once, and you will receive this benefit for a multitude of years. And oftentimes, people get stuck on
Then now,
the amount that they have to pay now,
Yeah.
and they're not focusing on the true benefit and the value of what they are receiving.
I think you said it earlier, the difference between a tax preparer and a CPA. If you understand what Herman and I always talk about, the rules of engagement.
Exactly.
What are the rules of engagement from the outset? So if you're looking over the gross period of time, 10, 15, 20 years, as you said before, that's now an annuity.
Right.
So when you get to X number of years, you have that coming back to you. So it's the overall picture, and that's why I believe in the team concept. But same thing we had in the military. You know, you have a team.
Exactly.
You don't win by yourself.
Right.
You win with the team concept. So that's why it was important for Herman and I to have you on today to have a conversation
Right.
with our clients and to have questions come to you and you provide input.
Well,
Yeah.
that's very important. And one thing that you said earlier is about relationships. It's in different professions, because if you're out in, say you're in the corporate world. I worked in the corporate world for 36 years, and you're dealing with different organizations, you're dealing with different companies, but it boils down to person that really get the work done and get the promotion is a relationship. Like your example showed, you see people walk in the door and sit down, and they make a phone call, and you wonder why they got the deal and you didn't.
Correct.
But there's been a lot of work done before that you don't know about.
Yeah.
that he wasn't aware of.
Yeah.
Exactly. Yeah, it's at the end of the day is it becomes, and being in the military, I know you guys can relate to this. It's all about preparation and being proactive as opposed to reactive. And I like to talk when I'm talking to people about taxes and tax planning, the difference between the two. If you think about it from a aspect of driving your car. If you're driving your car down, any street or highway, are you going to spend more time looking in your rear view mirror, or are you going to look out the windshield? You definitely want to spend more time looking out of the windshield because that's where you can see where you are going.
Yep.
As opposed to looking in the rear view mirror, seeing where you have been.
Much smaller scope.
Right. Now, right, exactly. The windshield is much larger than the rear view mirror. And so if we put taxes in the same perspective, income tax return is just that. It's a measure of what you did last year. So the cost for income tax return is going to be much smaller than having someone that can tell you about income tax planning looking out of the windshield as opposed to looking in the rear view mirror.
Right.
But to that same respect, you get much more benefit out of looking out of your windshield as opposed to looking in the rear view mirror. Because if you're looking out the windshield, you can see where you're going. You can arrive at your destination safely. So the same thing, you get much more benefit by focusing on income tax planning as opposed to worrying about your income tax return.
Hey, listen, we got a great boss, Miss Rogers, and she's done a tremendous amount of things to get this station to where it is now because she's smart. So we want to make sure that our listeners are smart. So would you give our listeners your contact information, business name, phone numbers, website, all that kind of thing before we get out of here today?
Absolutely. That'll be awesome. So my website would be www.dorsey, DORSEYCPA.com. And the phone number here to the office is 404-459-4174. Once again, that's 404-459-4174.
That's great information because we want to make sure that our listeners and have the opportunity to get with you because we have people out there that have small businesses, nonprofit organizations, personal tax information. It's just a wide gamut. So I'm sure Herman would agree with me that you provide a lot of great information today.
We do, and we are streaming live on Facebook and on YouTube, and we also will be in the archives, so you can go back and view this program on Facebook, and you can also view it on YouTube by becoming a subscriber, and the subscription is free. And we are WCEGTalkRadio.com, WCEG Network. Like us on Facebook, follow us on Twitter. We are available and we want to communicate and hear from you.
Marcus, is any good information in the few minutes we have left that you think our clients and listeners need to know about?
I think the most important thing I would say is to, if you don't have a tax advisor, I would definitely want you to consider having a conversation with one, because as I stated before, there's much more benefit from having a tax advisor as that you will receive than as opposed to having that. And I will leave you. Oh, I did forget my Facebook. You mentioned Facebook. You can follow us on Facebook at Dorsey, 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 CPA GA. That's our Facebook page. And then I guess the last thing I would leave you with is this: an ounce of prevention is better than a pound of cure.
Great information. Just want our listeners to know that our next show will be on Friday, May 7th, 2021, and then on Friday, May 21st, 2021. Now, Herman, and to you, Marcus, and to our guests listening out there, next month, this really starts on May 1st, will be National Military Appreciation Month. There'll be a lot of different topics that we're going to bring on for the next 3 shows to talk about the importance of the military during that particular time and the importance to the family. So Herman, I know from the guys on the blue side, Air Force side, you got some good information to tell the guys on the green side, right?
We got information for everybody, and
Yeah.
we, you know, as we speak about it, we want to empower the entire community.
Yeah.
So we figure we lift the veterans and their family up, and each one lifts someone else up, and we just keep growing from there. And part of the conversation today is, what I got out of it is it's about changing our culture, because what we used to do 50 years ago, we can't keep doing that. We got to, that's technology wise, that's emotional wise, and that's like having a accountant, having an attorney, having a doctor, having all these people as part of the family unit, which when I grew up in the country, we didn't have. So we want to make sure people are aware of that knowledge and can use it.
Well, teamwork makes the dream work, that type of thing. So to our listeners today, we have just been overwhelmed with great information from Marcus. Marcus, you're going to hear from me a lot again in 2021. And
Yes,
I'm
sir.
sure Herman and all of his guests that have a CPA like you would do the same thing. So from our owner, our leader, Penny Rogers, and the WCEG Network, we want to thank you for taking the time to be with us today. Herman, you want to close us out?
Yes, I have a nonprofit, and since you asked Anthony Accountant, I know he has one also. Mine is Veterans Helping Veterans. I will send you information with my website on it, and we will collaborate on that, making your information available to my veteran membership in the community, the people that I communicate with, because we are here to empower the community. We are here to collaborate with all organizations that can help the community. So your session today was right on point for me. It talked about the things that we need to talk about as far as time deadlines. You have things that need to be done in 1 year. You have things that need to be done in 3 to 5 years. And there long range planning, there are cultural changes that we need to make. So I think you covered all of that today.
Yeah, man.
Absolutely.
Good show, man. And again, just like Herman, I have a nonprofit. A big thing is going to come out this month, National Military Appreciation Month for Visually Impaired Veterans of America Incorporated. So look out for that. That'll be coming out soon. And you can go to my website, www.visuallyimpairedveterans.com. And you can also see me on Facebook, Visually Impaired Veterans. So Herman, to our leader, Penny, to Marcus, man, what a show.
Yes,
Awesome.
and
Thank you for having me.
we want to thank our founder and our person that keeps answering in line, Penny Rogers. And my nonprofit is Veterans Helping Veterans. I will get you that information. And our website is Veterans Helping Veterans also.
So I salute you, Army to Air Force to non-com. Have a good one, guys.
Thank you. We appreciate you.
All right.
Have a good day.
Bye-bye.